Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Tuesday, February 27th, 2018, and this is the Daily Report for Gold and Silver. Following a statement made by Jerome Powell, our newly appointed Fed chairman, we saw gyrations in the market, moving them dramatically lower. Gold closed down about $13.60 at $13.1920 after hitting a low this morning of $13.1440. Silver also under pressure, losing 20 cents at $16.34, and the dollar spiked up sharply, gaining about 0.5%, 53 points, closing above 90 at 90.23. The gains we saw yesterday in the Dow Jones Industrial Average were taken away, with the market moving down by 299 points, closing at 25,410. All of the indices were down by approximately a full percent. About the only thing that we did see rise besides the dollar was the cryptocurrency Bitcoin, gaining approximately $400 on the day and closing at 10,700 and 10,740 respectively of the CBOE and the CME futures exchange contracts. In Jerome Powell's first testimony to Congress today, he said in essence that the economy is strong and that during this upcoming FOMC meeting in March, they would take recent data to reevaluate current monetary policy as it reflects on the number of interest rate hikes that the Fed will implement this year. That raised the probability of 4 rate hikes from roughly 33% to 50%, this according to the CME's FedWatch tool. That sent market gyrations and dramatically lower pricing in equities, precious metals, and moved the dollar substantially higher. We are looking at our daily chart. Net result of today's activity is $13.1910. That is a decline of $13.70. The low today was $13.1440. We did recommend taking a long position yesterday, and traders, I am sorry to report, we were stopped out very quickly in one day of activity in which we got into the market at $13.34 and got stopped out of our trade at $13.15. Resulting in a net loss of $19 on the trade. Today's activity in lower gold pricing as well as silver did create chart damage in both markets. First to gold. As you know, we had a support line, which is simply drawn from our lows that were achieved back in December, then attached to these lows at the beginning of February. We have a clear and decisive break below that price point. We also have current pricing just below the 50-day moving average for the first time this year. This new data absolutely affects our interim or short-term market forecast, and based on today's activity, believe that we could in fact see lower pricing ahead in gold. My current target right now resides at approximately 1302, being the 50% retracement, and as low as 1286, which is the 61.8% retracement of the rally that began in December and concluded just at the end of January. As that rally concluded, it is now apparent that we have seen our correction unfold as a B, C correction, and that is why I am looking for a further decline in gold pricing. Silver also traded and closed with substantial pressure, losing about 1.36%, a net decline of about 22 cents on the day. If you recall, we had identified a compression triangle simply drawn from these previous highs and previous lows and spoke about the fact that we were getting extremely close to the apex. I believe that we hit the apex today and had a solid break below that. We also closed just below the 61.8% retracement, which resides at $16.35. Our current target should silver continue to trade under pressure has to be the 78% retracement, which comes in at 1584. Lastly, I do want to take a quick look at Bitcoin. Bitcoin futures continuing a slow and methodical climb ever since reaching these lows at about 9,300 per coin. We are currently tracking and looking for Bitcoin value to go back to approximately 11,500. Bitcoin futures today close at $10,730 per coin. Traders, while it was widely expected that Chairman Powell would state that the economy was strong, what took traders and investors by surprise was the fact that he mentioned that he felt that it was much stronger than he had anticipated in December. If you recall, December is the last time there was an interest rate hike, which not only raised the probability for a rate hike in March, but also raised the probability for the potential of 4 hikes rather than 3 hikes this year. As such, we saw dramatic pressure across the board. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.